Good morning. A very warm welcome to everyone joining our International Business Strategy webinar this morning. This is the third instalment of our FD series. We have a lot of content to cover today, but I'll ensure that the session will last no more than 45 minutes. I recognise that some of you joining today may already be trading internationally. Some are seriously considering expanding into new markets at the moment, and for the rest, this may be something for the future. But hopefully we can provide you with some takeaways for everyone. If you do have any questions, please put them in the chat function, and hopefully we can pick up as we go. As way of an introduction, I'm Andrew Mosby, and for those who don't know me, I'm a partner at Menzies, and I've had the pleasure of being invited to host the panel today. Most of my days are spent supporting businesses and international groups to deliver their international strategies. I'm on several global committees and champion any tools that can assist with cross-border communication. I'm joined by three panelists, James, Gareth and Nick. And guys, if you could please introduce yourselves, your international experience and your role.
Thanks, Andrew. I'm James. I spent the best part of 8 years with your esteemed hosts, working with Andrew and Nick at Menzies, before then moving to a listed multinational beverage company. And for the last 8 or 9 years, I've been running a international logistics business.
And hi, good morning, everyone. I'm Gareth. So I spent 20 years in international taxation. I'm currently Group CFO of Cazoo, who you may have read a little bit about in the press of recent weeks. So I can certainly give a perspective as regards international life. But for the last 2 years, I've been in pure finance roles, so away from the specific tax aspects.
Yeah, good morning, everybody. My name is Nick Farmer. I'm an international tax partner at Menzies. I do spend a lot of my time talking about tax, but also commercial issues about trading internationally. International is my focus. I sit on the International Tax Committee of our global network, HLB, and spend a lot of time coordinating and connecting with our international colleagues to make sure we fit together solutions for our clients.
Thanks, that's great. So let's crack on. For me, one of the biggest challenges of advising clients around expanding internationally for the first time is the assumption that the process of setting up and the ongoing requirements are going to be similar to the UK, when often they're quite different. But I'd be interested to hear about some of your biggest challenges and opportunities that you have each faced. James?
Yeah, so in preparation for the changes in the VAT environment post-Brexit, we set up in the Netherlands. Now, I've set quite a few limited companies up myself, but the process certainly in the Netherlands was very different, and each local jurisdiction will have different processes. In the Netherlands, for example, you can't set up your own company, nor can your accountant or your tax advisors, for example, which is very different to here in the UK. In the Netherlands, at least, you have to appoint a specific registered registrar who will do that for you. And it's good in a way because it takes a challenge away from you, but there's obviously a cost attached to that. All the legal correspondence is in local language as well. So make sure you've got an advisor handy who can help you with that. But the process doesn't need to be as onerous as it sounds if you've got the right advisor.
Thanks. Gareth?
Yeah, I mean, I'd echo that. Also, post-Brexit, set up a Dutch hub. But I think it's just, and we'll touch on this no doubt throughout, it's just about doing your due diligence. I mean, there are so many nuances in local markets. As you say, Netherlands and other mainland Europe countries, it is just nuanced. And, you know, I call out Italy probably unfairly. I can remember getting an advanced agreement with the Italian fisc, sat with an advisor over an espresso in a cafe, and that's the way things are done. So I think, as you'd said at the start, Andrew, you know, you can't look at these things through a UK lens. There are a lot of nuances from a local perspective.
Sure.
Yeah, I guess one of the things to sort of add that I definitely see is that companies are going international much sooner in their life cycle these days. So we're talking to a lot of companies that, may go internationally within, a year of incorporating. I remember taking a company global, and they were looking for that first mover advantage. They're in the tech space, and they felt that global was where their business was at. It's this kind of born global kind of view that you've got to get going globally, otherwise your competitors are going to do it before you. So we see a lot of early movers. And holding those, I think one of the things that is really important is to be strategic about this, to actually, not try and conquer the world on day one. Obviously you've got to think very carefully, what are your markets, what level of presence do you want in those markets, what resources have you got? So there's lots and lots of questions. And a few years ago, we put together something which we call a business model canvas, which has a lot of that content in it, which we provide to our clients, that helps them think through these questions to make sure that actually they do go into things with their eyes open. They are prepared for these differences that, Andrew and Gareth, you're mentioning, all these nuances in different markets. And I guess that's one of the things which I very much understand, that connectivity piece and the need to make sure that we're getting that local support from our HLB colleagues in our global network, reaching out to them in advance before things actually happen. So you've got that upfront advice and you're not on the back foot in that local market. So I think for me, the biggest sort of challenge is that you tend to see businesses going early into markets. They need to think very carefully about it and get that local support before they actually sort of do sort of expand overseas.
I think you're spot on there, Nick. I think early is important, if that's what, but also in a controlled way. Sometimes we come and they want to do 6 countries on day one, and that can be more challenging than dipping your toe in, I think the phrase is, to start off with. So I think you've got to also be realistic at the amount of work, budgets, which we'll come on to, that might be involved in this sort of process.
I think,
sorry,
yeah, Andrew, on Nick's point about more companies doing it earlier, certainly in the last 3 years, I mean, one of our largest trading blocks or trading neighbours is the EU, and the framework of trading with the EU has changed a lot post-Brexit. So it's forced your hand. I mean, certainly we've got hundreds of clients who have been trading internationally for 20, 30 years, but never had a presence on the mainland. Brexit forced a change there where they had to pivot and set up on the continent to mitigate things such as supply chain issues, VAT issues, and we've seen a flood of companies have to set up on the mainland for that reason. And the same principle would apply to a new business, a new econ business, for example. Pre-Brexit, you could trade with the EU pretty seamlessly with little cost, but that's changed a lot based on the new rules that have come in and the fact that we're not part of the same VAT community of the EU.
I think that's one of the things there, is that because of that, James, a lot of companies are now looking wider afield. It's always been the case, and I know we'll come on to the US, but that's always been a big market. That's always been sort of a dominant sort of pull. But because now the EU does cause more complexity, actually there's opportunities elsewhere. And one of the things I know we'll again talk about is the distance between markets. The EU was obviously, it's on the doorstep. There was an ease of doing business. There was a seamlessness. But when you look at some of the challenges which are faced with markets further afield, managing that distance, that communication from head office into the overseas jurisdiction, etc., that can add challenges, time zones, etc., language and culture. All these things are big issues when you're sort of looking, at the distance between the UK and that overseas market.
Yeah, it's a point I'd pick up on as well, from experience. Obviously, various ways to enter a market. I know from Deliveroo, it was easier just to set up an office and grow the business organically locally. Cazoo took the option to acquire businesses locally, and I think it's, to your point, I think it's super important, particularly in respect of acquisition of existing businesses, is how that business is, what the morale of that business is, how do they feel about being taken over and now taking direction from another country. And I think it's about getting, boots on the ground, as it were, face-to-face meetings to set out the strategy, the understanding, and particularly as we'll move on to the governance around operations.
And that's the integration piece, right? How do you integrate from the UK to that overseas market? How do they feel part of the same organization, that management process? I think people can underestimate the time involved. And that's one of the things when you're looking at going international. What resources do you have? What capabilities do you have? Do you actually have the bandwidth and time to invest in that overseas expansion? It's an exciting chapter in most people's business life to actually go overseas and start trading in a market, take your products and services to new customers, etc. But it's a very time-consuming process. So you've got to actually be true to yourself and actually look at the team that's going to be involved in that to make sure that actually, you can do that, to the best of your abilities.
Moving on, obviously Nick and I work for Menzies, but this is really geared towards from a FD's perspective, and I'd really love to hear about James and Gareth in terms of what skills you really feel as though you've needed to enhance or have, particularly when managing a more international global business. James?
Well, certainly for us, I mean, it helped to be, I'd like to think I'm a good networker. So building a network of local agents, local advisors, both logistically and professionally. Nick actually put us in contact with a few HLB contacts, some tax advisors and accountants out there, and really their local knowledge was absolutely priceless to me.
Did you get yourself out there?
Sorry?
Did you go over there, get yourself out there?
Once, yeah. But that's the powers of technology, isn't it? So I can speak to my local accountants in Rotterdam on a weekly basis, but not have to fly out there. So building those relationships is absolutely crucial. You can learn the local rules, but it's going to take time to get anywhere close to what your local advisors are. So build those relationships. In terms of when you're starting out, be in control of your costs. Be an accountant that plans and knows exactly what your costs are going to be. Someone who can agree costs up front. Certainly from the incorporation perspective, I was concerned that the cost of incorporating might spiral out of control. So close cost management is key for an FD who's looking to set up abroad.
Yeah, and I'd echo a lot of that. I mean, I just noted down patience and empathy. But completely, aside from that, it's just to identify how best to get things done. So just picking up on what James just said, it's getting that local advice. And as I said at the outset, it's not necessarily what's written down in their particular legislation. There is a different set of rules that operates on on the day-to-day basis. And also, you're never going to get everything done pre-launch. Every experience I've had is we want to go, as you said at the start, Andrew, 6 countries in one go. There's never enough time to get it into as perfect a shape and understanding as you would like it. So, it's the sort of 80-20 Pareto. Understand your main issues of getting in and get it done. There's, ideally you've got advanced agreements across the piece and a full understanding from a due diligence perspective, but it's never going to be the case. So pragmatism is also a key element.
I mean, you touched on people and that integration piece, and I think for me that is also imperative. There's lots of people issues around that. I mean, I think James, am I right in saying that you don't have any people on the ground? You used 3PL.
Right now.
Yeah, but
I mean, on that point, Andrew, especially in a boardroom, as an FD, you have to be quite strong because operationally, your colleagues can run away with themselves. They want to set up a property in Amsterdam. It needs to be right next door to the airport, and all of these sort of requests, and this is how they want to do it. But is it necessary? Is it cost effective? Can we do it? Can we do it from Rotterdam, for example? I mean, you really got to stand your ground, because more costs you sink into that international expansion, the higher the risk.
Jimmy, question for you on that then. How much research do you do upfront yourself? Because there's so much information out there available to people. A good guide, which I've used a lot, is something called the World Bank Doing Business Guide. They sort of ceased it. They're starting a new one, which is called Be Ready. And there's a lot of information in that about economies, the environment, the investment, climate, etc. How much do you do or have you done before you're sort of going into the market yourself?
You do quite a lot. I mean, you can do a huge amount of desk research just sat at your desk. I mean, but you do learn quickly through speaking to your advisors. Even just when I was corroborating costs and working out which advisor I was going to go to, because I recall you gave me 3 separate contacts, 2 in Amsterdam, 1 in Rotterdam. And before I'd even appointed any of them, just through my dialogue with them, I was learning a lot about what the process was going to entail. And that didn't cost me a penny. So it's a combination of speaking to people out there, doing your own desk research, and also thinking about the principles that apply here. You know you're going to be subject to tax here, so you're going to be subject to tax internationally. It's that and a combination of previous experience of working for an international business. It all just knits together, really. And unfortunately, you do learn as you go also. But the more measured you are, the more you plan, the less exposed you are, really.
Perfect. I'm going to move on a little bit to tax, and there's a risk here we could spend the whole time talking about tax and VAT. You throw in international, it starts to get complicated, right? Nick, Gareth, what are the main tax implications and considerations for trading internationally?
Gosh, yeah, it is a big question, and I think Gareth and I could probably, share a long drink on this one, and try and put the world to rights. But there is a lot. Probably trying to take it sequentially in a way. Obviously, a lot of businesses trade from the UK into overseas markets. They're not actually putting boots on the ground. They're sort of doing everything from the UK. At that point, you're hitting obviously issues with VAT and customs. One thing that does surprise people, I mean, those probably are unknown, but there's so many areas of the world where you can get hit by withholding taxes these days. I mean, I've had clients who've sold into overseas markets, and they get paid, but there's 10, 20, even up to 40% deducted from the payment to them because there's a withholding tax that they weren't expecting in that market. And sometimes that withholding tax is incorrectly being paid. There's often a tax treaty there, which should mean that the UK company shouldn't be paying that tax, and then they've got to think about possibly reclaiming, etc., from the tax authority. So again, this is this eyes open point. If you are trading internationally, know what to expect. Agree these things with your customer up front. If you've got a contract, get issues around VAT and withholding tax into that contract. I guess moving on, I'm trying to speak quite quickly here because I can see I could spend a lot of time here. Obviously, you get to that next step where you are putting boots on the ground, you are putting a presence into that market. And when you do put that presence into the market, then a lot more tax issues are going to come to the surface. These are the things that James is mentioning around sort of paying corporate tax in that market, having payroll obligations in that market. We've mentioned these sort of nuanced issues with different markets, and sometimes you've got property taxes you might not be expecting, etc. So again, talking to your local advisors, understanding those tax issues. I will mention the US as well. I think that's something we need to understand that the US is 50 different states with 50 different sets of tax rules. You can't look at that as just doing business in the US. Yes, there is a federal tax sitting there, and that will, be important. But where you go in the US, how you're exposed to tax out there is really, important to understand. There's so many layers of tax. They call it the state and local taxes, the SALT. It can be at the state level, it can be at the local. Unpacking that is important. There's a very good guide, actually. I will mention it, from the Tax Foundation, and it unpacks all 50 states and talks about those which are business friendly and those not. And you might imagine the ones that are least business friendly are probably the prime suspects: New York, California, New Jersey. These are ones that have the high corporate taxes, the high income taxes, property taxes, etc. The most friendly ones, actually, that sort of turn up on that list are Florida's pretty highly ranked. I think there's also Dakota. There's Wyoming, I think, comes in at the top. But the point being, actually, you can do a lot of upfront understanding of where to go in the US, where you might set up. All the states are hungry for inbound business. They've all got incentives to try and attract people to do business there, etc. So when you look at the US, you've got to go to that next level to look at the different states. Gareth, I don't want to hog all the tax issues. I know you've been through this.
No, not at all. I mean, I just pick up on that word incentive. Obviously, there's a host of things to be, identified. I was going to call out examples. I think we touched on VAT already, but effectively daily VAT uploads in Italy, 14 tax returns a month in France. But there are incentives. There's still structuring opportunities out there for tax benefits, and certainly as you kind of move away from Europe or mainland Europe, there are incentives dependent on which particular region you're in. Certainly in Middle East, depending on which particular area of a city you are in, you can benefit from lower tax rates or increased incentives. So there is a positive side to the due diligence as well as understanding your sort of day-to-day obligations.
I think one of the things, and I will just sort of add on to where we've got to in terms of when you've expanded, if you have set up that local entity, understanding the business model, understanding where profit is being made. And I guess, James, you're seeing this. You've got an entity in the Netherlands, you've got one in the UK. What is that interaction? This is from a tax point of view where we start talking about transfer pricing, understanding where the profit is being made and where the tax should be paid, so you can keep both tax authorities happy.
Well, I'm glad you raised the point, because I was going to tag it on the end. I mean, I'm certainly no international tax expert, but something I certainly consulted both our advisors in NL and Menzies about was, because there's so many intercompany transactions between our UK company and our Netherlands company, what are each local tax jurisdictions expecting? Now, the UK tax authorities and the Dutch tax authorities will be expecting both entities to be making a profit, or at least sharing the profit. We couldn't be deliberately crystallizing a large loss in NL, for example, because the NL tax authorities would be upset about that. So on a lot of our intercompany transactions, we apply a 5 to 10% markup, which ensures we are recognizing tax in the Netherlands. And to date, the Netherlands tax authority has been more than happy with that. Just one other point while I've got the floor, and certainly on the tax perspective, operationally for an FD as well, we're VAT registered in NL, and you need certain software to upload a VAT return. So ignore all the complications of understanding VAT rules in the local jurisdiction. You need the software to upload the VAT return. So we don't have that, but our advisors in Rotterdam do. So it's a bit of a niche consideration, but it's something you come up against on a day-to-day basis.
Yeah,
one of the things I just sorry.
No, I should say this is very much kind of where we started really in terms of internationally and UK are not always aligned. You mentioned about VAT. So the standard in the UK is quarterly VAT returns. The standard across much of Europe is monthly VAT returns. We have Making Tax Digital. E-invoicing is coming in across. The States don't have VAT. So there's lots of practical applications, software, as you mentioned, and other things. Nick, have you got a final comment on this? Because we must move on.
Yeah, no, I was just going to say, actually, when you're dealing sort of with just one jurisdiction, it can be quite manageable. But once you're into a more developed group where you're trying to coordinate between sort of 4, 5 plus different countries, all of those tax issues, that is a lot to actually have to manage. And just one thing which we do offer, and I think is super sort of valuable, is to get a sort of a dashboard visibility of what's happening around that group. You know, to be able to see clearly when taxes are being paid, have they been sort of dealt with, new deadlines coming down the line, to have that all in one place and to have that visibility in your advisors actually providing that information through a portal. I think controlling, you know, your international expansion is a big issue for an FD. You've got your UK to deal with, but understanding all those different countries, timelines, etc., being able to manage that, you know, it is something that's really super important.
Okay, well, moving on. James, you mentioned previously about budgeting and did you find the expansion more complex than you thought it was going to be? And did you have a budget or a plan in terms of where that was going to go?
I mean, optically, the process is a little bit daunting because you're going into a new market where you don't necessarily know the rules. But in reality, it was far from daunting and nowhere near as expensive as I thought it would be. I think we incorporated, and the legal costs of doing that were probably less than 6K. We agreed quotes with our advisors up front, so that didn't spiral out of control. And I felt that really helped, so I could ask as many questions and make sure it was done as probably as possible without costs escalating. In terms of budgeting, we're doing our international expansion in a very phased way, so we don't have boots on the ground. We started just with a serviced office from day one, rather than a permanent lease on a property. And you need a permanent establishment to incorporate in NL. So the easiest thing to do was to take a serviced office, which costs you less than 150 euros a month. And naturally, if you do your expansion in a phased way, it's quite easy to keep control of costs. And then you move on from there, really.
Perfect. And Gareth, directly to you, you've obviously worked across a number of businesses. Do you have any comments about what models have worked well, acquisition models versus set up from scratch type things? And would you have done anything differently given where you sit now?
Well, putting Cazoo to one side, I mean, historically, I mean, it's been very much business dependent. I mean, I was at Sky and we obviously acquired Italy, Germany with some, you know, very plausible and bona fide tax opportunities, utilising Italian domestic rules, through to, you know, Smith and Nephew, which was a, you know, 100-country medical device manufacturer. We had the Dutch distribution piece from a Brexit perspective, and that was all about entities. We moved certain service centres into branches, which again worked well. I mean, from a branch perspective, it's still a taxable, you know, entity, as it were, from a tax perspective, through to Deliveroo, which was very much a, you know, you set up locally, be that a serviced office to start, or you take an office, permanent establishment, grow that, and then incorporate once you've built out your sort of rider population. They've all, you know, they all come with their own challenges. They all come with, you know, varying degrees of compliance obligations and governance. You know, an entity obviously has more governance because it is a thing rather than a branch, because a branch effectively is just a thing for tax purposes. rather than as opposed to an entity. And then look, from a Cazoo perspective, it's back to what we were saying earlier, and you said it, Andrew, a client wants to go live in 6 countries. That's what Cazoo did. I mean, that was just the way that the music was at the time, when money was slightly cheaper. And it's about making that splash and growing the brand. And if you've got an endless supply of money, that's the way to do it. But unfortunately, nobody has.
It's interesting, isn't it? Because on one hand, I'm saying tread carefully, do it in a structured way, not dive in. But I think sometimes some of my UK businesses need a little bit of a push. It does feel a little bit daunting, irrespective of what you say, James. The idea of, I think as long as you get the support, the research, and you probably have clear goals of what you're trying to achieve, and a realistic understanding of how you're going to measure what success looks like. I'm going to sort of start with James on this one, really. You did your research, presumably. You talked to a lot of people, you said, but did you have some really, it was forced on you a little bit, was with Brexit, or?
Yeah, I mean, many of our clients who've been trading internationally had to pivot to accommodate the changes of Brexit and the fact that their goods that have been shipped into Europe for the last 25 years were now attracting VAT and getting stopped in customs. So many of them were forced to set up in mainland Europe, where they could send vast amounts of their goods into Europe, clear it on their own EU VAT registration, then it's free in circulation. So we had to help them and provide a logistics hub on mainland Europe. And that meant Crossflight needed to trade with UPS NL or FedEx NL or DHL NL rather than DHL UK. And all of those local agents, they wouldn't do business with a limited company. They would only do business with a BV in NL, for example. So we had to set up a business out there to facilitate that. And just touching on, I know you mentioned earlier what represents success. I mean, that enabled us to provide our service with no interruption. So as far as our customer was aware, nothing had changed, even though behind the scenes quite a lot had changed. And as long as their goods could flow from London to Madrid, albeit London, Amsterdam, Madrid, they were happy. And that was the mark of success for us, the fact that the goods could still flow seamlessly, and the goods were still, there was still commercial appetite for them. So these changes in laws didn't make their goods more expensive or didn't make the delivery process longer, these sort of things.
Gareth, obviously having clear goals and understanding what success looks like, I think is important for any business. It's very easy to dive into something and then reflect afterwards and say, we did all right, without really understanding properly what the original goal was. You kind of forget what you're trying to achieve. Those sort of comments that you echo as well with your experience?
Yeah, absolutely. I completely echo what James has said. It's obviously we exist to support, the business goals. And you said the word, no interruption. That is the goal. And it's back to the piece around governance, because we've talked a lot about how you would set up and how you would enter, but it's the ongoing as well. So subject to what that is, I've got Swiss Treasury functions in my head, but you need to make sure that everybody understands the kind of the boundaries within which, from a finance perspective, what they are and aren't allowed to do. I've got a great example of something we purchased in Germany. Somebody decided that it would be a great idea and a cheaper option to service the product across the border in France, and obviously created a VAT PE, which we've effectively been trying to deal with and unwind for the last 18 months because somebody just didn't know. So I think it is that continuity is success from our finance lens to completely support the commercial operation.
Anything for you to add here, Nick, or shall we just move on to the poll?
Well, I don't know if you're talking about success, but I think that success is measured differently for different businesses, etc. What they're trying to achieve, what their reasons are for going abroad. I remember one of our clients that wanted to be in Brazil. And actually, that's a very challenging market, actually. And they found that they couldn't make a profit there. There was a lot of local taxes at different levels, etc. And the way their business model worked, it was very difficult to make a profit. But they wanted to be there from a profile, from a footprint perspective. Being in the market was important to them, so they found a way to actually trade there, limit their exposure, etc. And then that gave them, that global kind of footprint. So that to them was success. I mean, in other markets, often it's quite difficult to, compete. I think companies really need to understand their resources and capabilities to sort of unpack that. How are they going to, gain a competitive advantage in a new market with, local incumbent providers there, etc. That can take quite a lot of time. So, when we do the modeling with clients, quite often those early couple of years are loss-making years. You're going into a market expecting to make a loss early on to try and build traction to then hopefully make profit down the line. So I think, Gareth, you mentioned the word patience, and I think you do have to have patience and not expect that you're going to land in a new market and get success on day one.
Perfect. As we come towards the sort of conclusion of our time, and to help us understand everybody's interest, we have a quick poll, which should appear shortly, hopefully. There you go. If you could all just have a look through, everyone on the call, and complete. And then I'm going to ask our panelists for their final comments and a takeaway from each of you. Actually, between the interests. James, starting with you, any final comments or takeaways?
Appoint good local advisors. You're never going to be the local expert. And also ask yourself, first and foremost, if you're just starting out and looking at expanding internationally, can you do it with your existing UK framework? More often than not, you can't. But if you can, if you're an e-com seller, for example, there's new platforms such as, I think it's a Zonos platform, where you can sell into Europe and the rest of the world, and that platform will take care of all the VAT complexities for you. So someone buying your goods from Madrid, whether it's a pair of socks or a hat or whatever, won't ever see the complications or issues associated with that. So there are ways where you can still trade internationally, albeit by your UK business. If you can't, ask yourself what's stopping you. If it's a supply chain issue, speak to your logistics partners and devise a plan of how you circumvent that issue. But ask yourself that question early on: what is stopping me from trading internationally? And that will dictate what sort of strategic model you need to go for.
Right. Gareth?
Same. I mean, it's just take as long as you have to do your due diligence. As James says, local advisors, there are those nuances. Yes, you can do a bunch of desktop, and that will give you a framework, but local advice will be able to populate that with the day-to-day. Set clear governance guidelines locally. And as importantly, you need to monitor those and test them, subject to what particular form you've taken in that other country. And really, again, from a local advisor perspective, we've talked about tax, but obviously there's legal. We've picked up on some of the nuances around ownership of entities, but it's the compliance piece. There's some funky accounting out there as well. So it's really just across all of the main corporate areas to get that understanding.
Perfect. Nick, just before I come to you, you both mentioned local advisors, and just a quick shout out to HLB. Menzies are part of a international network, HLB, which is in 156 countries. I think James has already mentioned using them there's over 40,000 employees across that, and we are very, very joined up. Nick and I are heavily involved in HLB. We know the people. We go and see them. I'm in Prague in 4 weeks time, at a global conference. So, we're here to help. So if you do need some representation in these countries, there's very few places in the globe we don't touch in some shape or form. I don't know if you want to add anything to that, Nick, but any final points from you otherwise?
Yeah, no, I think so. I mean, obviously echoing everything that people are saying as in terms of the sort of summary, I think getting your ducks in a row is really key around international expansion. There is this ecosystem out there of advisors that's obviously going to be crucial to you. Gareth, you mentioned legal. I mean, visas, immigration, that can just stall the whole process if suddenly what you're looking to do, you find that actually it's going to take you 6 months to get a visa. So you actually do need to sequence things up very carefully. A framework which I think is very useful around an analysis tool is something they call a CAGE framework. CAGE standing for culture, administrative, geography and economic. And if you look across those key areas and analyze the market that way, it will start to tell you a lot about it. You'll have some key guides about a market, the culture, the currency, the legal, the tax, the time zones, all those kind of things. Start to really understand the way that is going to look and feel for you as your company goes in there, and how the resources and capabilities you've got are going to match with that market. So a lot of good things that you can do in advance, and as you're saying, layer on top of that the local advice, and it should be an exciting chapter in any business's evolution.
Perfect. We're just about out of time. Just enough for me to say thank you to our panel, and for you guys and everyone who's attending. Our next and final webinar of our 4-part series will be on mergers and acquisitions and the role of the FD. Look out for an invite in early September. Thank you.